This is Justin Pulitzer. This is my weekend video for the week ending September 14th, 2014. Let's dive right in. There's a lot to cover. We're going to start macro view. So SPY, as we know, had come up from a break, and we made some new highs, and we've sort of just been listing and chopping and going a little bit lower, but still holding over this 199.06 level. I'm filming this on Sunday night, so the S&P futures are already down about $7. So technically we would open up below this level. The important levels to hold here, though, are going to be the secondary trend line here, which, as you can see, was coincided with this breakout zone, and also the 50-day moving average. So that's a little bit lower here. That's around the 197s, which is kind of what I've been saying the last couple of weeks, that we might be vulnerable down to, at least initially, on some type of a pullback. If that area doesn't hold and the correction decides to get a little bit deeper, then we're looking really possibly at a 50% Fibonacci retracement, which really takes you to the middle of this range, which is 196s, 196.07 to be precise, and then possibly the primary trend line, which coincides with the 61.8 Fibonacci retracement, which comes in at 194.76. So I'm thinking that we have to take this in stages, and we'll start off with looking at these reference points. Again, if we happen to get back to the upside, anywhere above this downtrend line, as you can see from the last few days, would get bullish and put the highs back into play, and possibly get up for a high of over the 204, which is the 161. I'm sorry, 161.8 Fibonacci extension down from from some prior lows. So that would be the target to the upside. But as I had mentioned, we're down over 7 points here on Sunday after hours, so we might have to deal with some of these downside targets first. Qs, on the other hand, have been holding up a little bit better. We've been holding up here high and tight above this 20-day moving average. Obviously, they're going to be down a little bit on the open because of the futures being down. And my thought here is really just that the Qs may just want to retest its breakout point around the 97.51, which also coincides with primary trend line. So again, nothing really super bearish in this pattern just yet. If it starts breaking this area, then we have to start worrying about it really kind of coming down lower. But again, as in stages, so let's just deal with this first. If we do happen to snap, the real risk, again, is to come down to this area to set up for some type of a head and shoulders. But again, this is getting a little bit speculative. Let's not get to that point right now. Let's just deal with the levels as they come. So my thought here is that any move down to here would probably be a buy for a right in or a right or right out type of trade off primary trend and the breakout. IWM, on the other hand, is sort of, again, just been in this kind of like choppy mode here. It's been making some higher lows, but also some lower highs. My thinking here is that, and I had mentioned in last week's video that there's a caution zone around this 117.37, that anything over that starts becoming hard to sustain, as you can see on a longer chart, that we kind of are just in this like large chop zone between like 120 with over 117 starting to get unsustainable, and then the supports coming in down around the 107. So my thinking here is that anything over like we have this a lot of moving averages here. There's a large confluence. If it comes down to here, maybe we buy it off of the trend line and just play this this narrowing of the triangle, so to speak. But any move here, in my opinion, over this 117.80 would probably get that move up here, because now you'd be putting in higher highs in this type of a pattern. And my thinking is this would catch a lot of shorts off guard. So just keep in mind, set that as an alert. Like I said, the futures are down a little bit here, so we might be coming down to test a little bit lower. But that pattern could always reverse, and we could come back up. So always be on guard for everything. But as of now, this is sort of just a chop zone, and really, in my opinion, probably not the best setup for anything here. Let's take a look at gold. This has been some chart. If you take a look, if we go out a little bit further here in gold, you can see for really the better part of a few years here, 2 years, we've just been in this really nasty pattern of really equal lows and then lower highs. So my thinking here with gold is that I don't know if this is going to hold again. This would be a third time touch, but my guess is that it might be a good spot for a right or right out type of a trade for a bounce, and that would come in around these this 114. Gold tends to be a little bit funny. It doesn't always do what you want it to do. So my thinking is that wait for this setup. If this happens, then it's a trade. If not, it's sort of off the table. And then if you do come down here, we're going to be looking for a bounce up to I would think a 38.2 fib retracement. And if you take it from this high here, from this peak, you're looking at about 120.23. And if you took it from this last peak, you'd be coming up to this like 121.94-ish area. So somewhere in here would be the target for a sale on any type of a bounce from if we do get those equal lows down here in the 114s. This is as you can see, we violated here just a little bit, so just use it roughly as a range. Mid 114s is kind of would be the entry point for a bounce play. If it collapses there and it doesn't hold, then just stay out, get out, just take the small loss. But that's what my thought is that we may come down here. I mean, we may come sideways and come and grind down there. It may take a while, but my thought is that would be a buy for at least for a bounce. TLT, that's another one I've been eyeing. I had posted in my video that I thought from a couple of weeks ago that we were sort of in this channel and that we were coming up here into the sort of the end of the upper part of it, and I was thinking that this was going to set up for a short here close to about 120, and we got really close there, and it just completely collapsed and we broke the channel, and now we're coming back into some other pivots that I see as important. And this one down here, I had posted that I thought that this was sort of a good right or right out play, that if we held this this sort of primary trend in here, that it could be a decent buy. If you take a look on the ZBs, which this really keys off of, that is a little bit more bearish here. You could see that we broke this trend and broke this trend, and we're kind of setting up where there may be even room down to the 134s here, which were these equal lows and these highs here, and also a 200-day moving average. So if we do happen to get down there, particularly after this type of an extension of this type of oversold, I would think that TLT on any weakness here is probably a buy for a bounce, or if you want to do it through the ZBs, that's fine, somewhere in the 134s. But that's getting oversold. As you can see, we've had these declines before, and then some chop, and then a resumption upward. But my thought here is I'm not really a bond bull. I'm just looking for a trade setup, and I'm thinking that there's going to be a bounce play coming in soon because it's been coming down pretty hard and fast. Let's get into some Momo because I know that's what you guys all are really interested in. So let's do it. So Apple had their event this week, and they launched their iPhone 6 and the 6 Plus, and they give a bit of a preview for the iWatch. All hunky-dory, whatever. Let's just talk stocks and levels. So what's important about Apple here is that we did again come down here, and on a shorter time frame, I have multiple time frames on here, so I'm sorry if it's a little bit muddy. This came down to a little bit past the 61.8 and held the 50-day again, and then bounced up. My thinking is that if Apple is above 101, that's bullish for a move to 103. If it gets below there, the really key hold here is this old high, which is the 99.44. Anything below there starts to me getting a little bit more bearish and a little bit squirrely, and probably you don't want to play long. Play so long. You might be looking for some bounces lower, but if you're looking for the momentum trade, you kind of want to wait. What really needs to be taken out is this big reversal bar. If we can get back up over this 103.20, I think that we're into a new range, and that new range could take us even up to 109. I have a lot I want to get through, so I don't want to go too much into detail because it didn't happen, but take my word for it. My thinking on Apple, again, if we're over this 103.20, set your alerts here. That's going to probably easily take us up through these highs and get us into a new range. If we can't get over this bar, it's really less of a trade. You're sort of just playing in the range, and I think that Apple kind of needs to prove itself over this bar for the real Momo players to come in. That doesn't mean I'm bearish on Apple. I think it's possible, but the market has been a little bit squirrely. We do have the Alibaba IPO coming, and there might be some selling in some NASDAQ names to raise some funds for that. So just keep that in mind. Apple really needs to to hold for sure this 20-day moving average. We could even move that up. Like I said, the must hold here is this 99.44, but it really needs to hold the 20 MA. So somewhere in this dollar here is really the key hold. So right now it's at 100.46. So somewhere between whatever this rising 20-day moving average is and this old peak is the must hold for Apple. So let's move on to Facebook. Facebook, as you all know, I've been fairly bullish on. I like that it's over this 76, 74. Anything over there to me is pretty bullish, but and it's still a buy the dip stock as long as we hold this 20-day moving average and this. I don't know why this is red. It shouldn't be red. It should really be green. This little trend line we have here. So my thinking is that Facebook still has some Momo up here. If you're long, it's a hold. If it comes down here into the 20-day moving average or into this like rising wedge, it's a buy for a right or right out trade. And again, though, be mindful if this does happen to fail, we're probably going to see the 50-day moving average again quickly and then reassess if the market's really weak. We may even see a move down to these primary trends. But again, that's getting ahead of ourselves. Facebook has been showing some relative strength. I think as long as we're over that old high and as long as we're in this wedge, it's a go for higher. But keep in mind, let's keep an eye on those levels pretty closely. Another one which is very much similar is Twitter. I've been talking about the bucketed ranges that are important. Anything over this gap high, 48, is pretty bullish. Anything over 50 is more bullish, and anything over 52 is real bullish. As long as we hold this sort of, let me zoom in tighter. As long as we hold this secondary, really tertiary trend line here, it's fairly bullish. I'd be looking for a buy the dips if it does happen to come back somewhere onto this trend line, and as long as we're in these ranges. Off the 20-day moving average. I happen to have a bit of a long bias in Twitter. I'm short some puts, so my deltas are pretty low, and I had been taking some profits as we rose, but I'd be looking to add on some weakness. Again, that just keep in mind that above 48 is bullish, above 50 is more bullish, and above 52 is extra bullish. So that's really the range that matters in Twitter. Google has been a bit of a choppy mess here. This could also be maybe a victim of the raising funds to buy Alibaba. NASDAQ, we had been sort of here making some higher lows, and then here started breaking the pattern with higher highs, and my thinking was that we were going to come up and retest some of these other reference highs. That didn't really happen, though. Surprisingly, Google kind of came down hard, and then it had a bit of these two reversing bars. Let me try and zoom in there to show you guys. You can see you had this hammer with a slightly lower low, and then wham, this one kind of came down and negated those. But really, what did it do? It just came down to this rising trend line. My thinking that this again should be green, I believe, for the purposes of our video. So as long as we hold this trend here, I think that Google is probably still a hold here. If we lose this, then I'm looking for it to come down to this 577 level, which was this reference low, and possibly even snap lower to this rising 100 and 200-day moving average, which comes in again with these reference lows. I don't really think that this pattern is really super bullish or bearish at this point. It's sort of just chop. And I would wait for, if you're looking for a short, I'd be looking for some type of a snap here, let it do the snap, and then maybe you can play it down to here. And if you're looking for a long, anything up over these reversal bars here gets bullish again. So set the alerts for 593.72, and then set the alerts, or I guess you could just see this visually if you happen to be trading it. Anything really below this trend line here starts getting a little bit more bearish for a test down into here, and then maybe with a price target over here if the market does start getting some get some swirly action going. There's another one I get asked about a lot. I don't really trade this stock. I honestly really have no interest in it. It's sort of one I missed. I regret it. Really, the buy would have been up over this high, over this let's just say $50, over 49.90, and you could see you got this extension. My thinking is if you weren't long GoPro, you're kind of you're kind of getting in a little late to the game. I mean, the stock is pretty bullish, and it probably has some room if the Momo and the market stays. But I mean, this to me is getting a little bit parabolic. I mean, you could see what happened if you want to talk IPO and excitement. What happened with Twitter? Let's see. You can see you had this. Oops. You had this like sort of like hockey stick move up, and then it just kind of collapsed. GoPro's chart is a lot better than that. I think it's actually fairly bullish. I know a lot of people have been trying to step in front of the shorts here. Not really my style. If a stock's making higher highs and it's sort of now, we'll see if how it does and it consolidates. I mean, if you're a bull in GoPro, anything over this 68.29 is pretty bullish. This was a reversal bar. Whenever you take reversal bars out, that's a very powerful pattern to the upside. So I really wouldn't be on the short side of this. I'd probably, for me, just my personal style, would be interested in buying this on some type of a pullback, maybe to the rising 20 MA for a day trade, wherever that happens to be. And then if it came down a little bit more, maybe to retest this breakout point or even the primary trend. That, to me, is a bit of a higher probability setup here. To me, to first be getting in here is a little bit late in the game. Again, chart is bullish, not really my style, though. One I have been trading is this ISIS Pharmaceuticals. I think that this stock looks pretty good for buy the dips, although it now is getting a little bit late. As you can see, we're getting to this upper part of this trend and getting a little bit close to this 61.8 fib, which where the breakdown was. So I still think buy the dips with caution, as long as we hold this uptrend here. As you can see, we're sort of have a trend in a channel. So as long as this trend holds, it's kind of bullish, because look, we came up here, we took out this double top here, these highs, and then we came back and retested and held successfully, only to make a higher high. So this channel could break. I mean, it doesn't have to be set in stone, and if you do start getting over there, you could possibly see these 47s, and that to me would be the point where I'd be looking to book some gains, some profits up here. Again, I think this is a buy the dip stock, as long as this trend inside the channel holds. If this snaps, then we're going to start looking for possibly a buy off of the bottom of the channel, wherever that may be at the time. So that's ISIS. Another one that, guys, I've been really bullish on is Tesla. The stock has performed pretty well. It held its own pretty well in this week's sell-off, and it's really kind of just bull flagging out here, and it's holding this secondary trend line. And it has the rising 20 MA just a little bit below where price is, about it's trading about 269. So all right, it's about $10 lower. My thinking with Tesla is that this is going to be a little bit dependent on the market. If the market's really soft, I can't really see Tesla holding up under too much pressure. But again, that hasn't been evident here yet. I think that the stock has some potential. If it starts taking this flag out and getting back up to these old highs, you could see that move to 300 or even higher on an overshoot, on a squeeze. This is a heavily shorted stock. A lot of people still don't believe in it. I think this move here caught a lot of people by surprise, and you can see just by this pennant forming that it's holding price fairly well. I would think that Tesla anywhere still over this line here is a right or right out. With some slippage down to the 20-day moving average. It's probably a little bit easier to be short puts in this on dips, just because of the ferocity of the moves that this could make. And then play shares for more day trade or interim swing actions when the Momo does resume. That to me is the easier play. These stocks are all much easier when the Momo is on your side. This to me is just coiling and getting ready. If the pattern falls out of bed, then we're going to see the 20-day moving average and possibly this 50% fib, which also coincides with primary trend down around the 252s. If you do start taking out these like these wicks here, like if you get up over this reversal bar day over 285.49, like 285.5, you'll probably see this 291s, and then we'll be off to the races to the 300s. So let's just set some alerts and just keep an eye on Tesla. Again, pretty bullish pattern, but it needs a little bit of market cooperation. The last one I'm going to cover today is Yahoo. I know there's a lot of people that are excited about the Alibaba IPO, and we all know Yahoo is involved with that stock. My thinking on Yahoo is that it's getting a little bit parabolic here. You did happen to take out this old swing high, which is important. That means the stock is still pretty bullish. there probably is still some room if you look on the Fibonacci extensions up to the 127.2% fib, which is around 44.32, and then maybe if it goes full on parabolic, you have some room up to this 47.63, which is the 161.8 fib extension. At that point, I really would be looking to pull the ripcord. I think that the stock has moved a lot. It's come up at this pattern here, kind of coming up from the bottom in a bit of a parabolic state, and I would think that the fever on this breaks really soon after this Alibaba IPO. Not one I've really been trading or have been that interested in, but I had traded it earlier in the year pretty successfully. But I do think that we are getting a little bit late in the move, and any type of another spike up, I'd probably be looking to book some profits. As far as Alibaba goes and how I'm going to trade that, I have to see how the stock comes out where it's priced. It's a pretty wide range here. They're talking about $60 to $66. That's a pretty big range. My thinking is that the stock is probably going to have some legs to it and do something like a GoPro. But let's see how the market condition is and take it from there. I want to just circle back to SPY a little bit and just discuss with you guys my thinking for this week. We do have a Fed meeting and some action that's going to be coming out. I believe it's Wednesday. So my thoughts are, if the market is weak into the Fed, like if we're coming down hard into the Fed, it's probably going to have a bounce on the Fed. If for some reason we come into the Fed really strong, maybe we get a sell on the news on the Fed. So I sort of think it's going to be do the opposite. If we come into the Fed weak, it's probably going to be a long. If we come into the Fed strong, it's probably going to be a short for a pullback. The employment numbers haven't been really good. The economic data has been kind of spotty. My thinking on this is that, maybe we do get a change in Fed language. I know that's the fear. A lot of people are worried about that. My thinking is just that if, bad news has been transitory with them, maybe good news is a little bit transitory. They're going to wait and see. I know we do have QE coming off, and, there's a lot of fear around that. But my thinking is the Fed isn't going to really start getting into like super-duper, hike mode until they start seeing some, how the market handles itself after they stop with the QE, and also to see how it handles itself, how the employment numbers show themselves as well as economic data. So that's my thinking for the week coming ahead. I hope this helped. If you have any questions, please let me know. Please be sure to like this video. It definitely helps. I always like to get some feedback. And if you want to follow me, please follow me on Twitter. My handle is @JustinPulitzer. Thank you. Enjoy the rest of your week and have good luck trading this week.